one, go. All right, we are live. Welcome back, everyone. Good morning, good day, good night, wherever you are, to another Hummingbot Live. Today we're here with our CEO, Mike. So we're going to talk a bit more about market making, essentials, especially to newcomers, try to help a bit to understand better what is market making, how it works, what you should look for into understanding and learn.
Yeah.
Right. So
yeah.
Go on, Mike.
Yeah. Hey, everyone. Just thanks for having me on Hummingbot Live this week, Paulo. And everyone out there in the watching audience, and also the future people who are watching YouTube. We do this every week to try to engage our audience, really educate people on how market making and algorithmic trading works. Because we know that we're one of the first open source algo trading software out there, and in order to really use our software correctly, people need education. And so that's why kind of we've been doing this this session every week. And I think going forward, we actually want to focus even more, kind of make it more live, more real time. So we'll try to do more interviews with exchanges we work with or projects, as well as, and we're not having an interview. I think me and Paulo will just try different things with Hummingbot, try to push the envelope and really try to show everyone how we would use Hummingbot ourselves. So that to help you have, to help you guys, get the most out of our software and to try to develop the best bots and best strategies for you guys as well. So that's why, I think that, hopefully we try to make it fun as well. So if you have any suggestions on, what we can do, please put in the chat, and we want to try to make it as interactive and as educational as possible. So back to you, Paulo.
Chat is open, and anything you want to say, talk, ask, it's just add it there, and we'll bring it to the show. So before Mike show today what he prepared for us, to a few examples of how we use the bot, I want to share first a bit of information that I think it's a bit essential to, especially to newcomers, when they start to use the bot and start to understand what is market making. That when you look at trading, investment as a whole, there's basically two types of trading, right? You have a passive investment trading and you have an active investment trading. So if you take passive, you go to HODL, index funds, and any other that basically you buy an asset and you keep it on your wallet for a very long time. When you go to active, we are delving more into trading territory, right? So the important part here to understand is that there's two types of active trading. It's directional, where we have the technical analysis, where you look into indicators and everything that you take from the charts to try to detect the trend, try to find better entry points for your trade. We have fundamentals that we take what's behind the whole project, what's behind that asset that would justify buy or sell at a certain point in time. We have quant directional trading models that are a bit more complicated, but it's also a bit related with the need to have a proper and a good tool like Hummingbot to execute this kind of strategies. And we go to the market neutral. The big difference here is that on directional trading, usually you try to find good endpoints, be it for buy, be it for sell. But the market neutral strategies, the idea is that you look for profits no matter what's the market direction, right? So the most common examples that we have would be an arbitrage, volatility trade. This is a bit more complex because you need to use derivatives like options to understand and you need a bit more specific knowledge to how to do volatility trading. And we have market making, that the focus on looking for profit for market makers is to kind of take the small movements from the markets and capture the spreads that happen during these small movements. So that's basically why it's market neutral. You don't necessarily need to find the right trend, the right market direction to have a good market making strategy. right? So that's the first part of the presentation. I'll get back to Mike. He's going to show us, start showing a bit one of our strategies and show it working live.
I'm really glad Paulo shared that because as everyone probably knows, the focus from our side of Hummingbot are really on the market making bots, and that's really because the way we make money and sustain the Hummingbot project is through the Hummingbot Miner platform, where we encourage people to use our software, run market making bots, and earn rewards by providing liquidity to various projects. So that's kind of why we've really focused on creating market making strategies in Hummingbot. But as Hummingbot is an open source algo trading software, it can be used by anyone to create and extend other strategies as well. So we do offer arbitrage, it's from different exchanges, and creating more documentation that shows. So if you want to, you can also create a trading strategy. You can even use Hummingbot, frankly, to automate some of the passive strategies as well if you want, and have something that automatically your portfolio. Obviously, we don't focus on that because for us, we really focus on market making, because that's our bread and butter. But we are starting to do more hackathons and more kind of like more community-based efforts to teach and encourage users to build their own strategies of all kinds. So so today we're going to focus on marketing, but hopefully, if you guys want, we're happy to kind of like share other types of strategies that people might do with Hummingbot in the future.
Yeah, and recently we finished a hackathon with OpenDefi community, and we got some really interesting contributions there, including strategies that weren't necessarily market making strategies.
Right.
They kind of used the bots to create. For example, one of them was a dollar cost and average, where the bot would execute certain trades at certain times to keep rebalance the portfolio in a certain way. So yeah, you can customize a lot with Hummingbot.
Yeah, and I don't want to, I don't know spoilers, but be on the lookout for some future announcements on that front. Between us and some of the major exchanges and protocols in crypto. So, but today we wanted to kind of like really kind of like try to show more of the basics of market making. That's why I know that we've launched a lot of new strategies recently, and so I wanted to kind of like kind of place myself in the shoes of a new user, and because it's actually I've been so busy with Hummingbot stuff that I haven't really had a chance to really use the new software again. And I wanted to just like try out one of the new strategies we've launched recently with Paulo's direction, and really try to kind of like show what it's like to be a market maker for the first time, and to really use Hummingbot to try to show how market making really works. So let me share my screen. Okay, so I have like a fresh installation of Hummingbot on the left-hand side of my monitor, and I have a Binance test account on the right-hand side of my monitor. And so all I've done with the Hummingbot instance is just install it, and I added my this Binance account API key, so which just has some random tokens in it from various currencies. So before the presentation, I went and I purchased some Doge for the first time. I've never owned any Dogecoin before, but I thought for this demo, it'd be interesting to try to see, to try to run a Doge to Bitcoin trading market making bots, and especially because Doge is one of the most volatile assets in crypto. So it just goes up and down, with moved by market forces or Elon Musk or something. And so it's actually very difficult coin to market make for, because as a market maker, volatility is your biggest enemy, so to speak. And because you want to be buying, selling, making your spreads. But one Elon tweet about Dogecoin, and suddenly the market might go up or down 20%. So it's a very hard asset to be a market maker for as well. So that's why I thought it'd be a good time to kind of illustrate what it means to be a market maker, how you make money, but also how you might lose money with a market like this, and showing how a bot, how you might automate a marketing strategy.
Yeah, and that's something important to remember, that even though the idea of market making is to be independent from the market direction, there is always risk in any kind of trading that you run through. So as always, make sure to learn, understand, and seek knowledge on how everything works before putting some real funds in it.
Yeah, and it's also this is a good reminder. It's a good time to say our usual disclaimer, which is anything we're saying here is really for educational purposes. You know, the goal for us to do these live streams is really to teach people how to use our software. So it's everything we do is not for investment advice around any specific token or trading strategy. And please consult, you know, your financial advisor before doing anything, you know, with the software if you want. Okay. So I think the first thing, so I'm going to try to create a strategy first. And so, and the strategy I'm going to create is the Avellaneda market making strategy. And the reason is because, you know, when we first started Hummingbot, you know, we just want to create something simple that people would use. So we launched a very simple market making strategy called pure market making. And then a few months ago, we went back and we kind of rebuilt a new market making strategy that's based on one of the classic academic papers on market making, written by a couple of famous academics, people named Avellaneda and Stoikov. And so the Avellaneda market making model is kind of like our new flagship. We think our new flagship strategy. It has a more fundamental kind of like theoretical basis that we think is grounded in a really like a well thought out theory around market making. And so I'll explain how that works throughout this video. So initially, let me use the create command. By the way, in Hummingbot, you can always type help to see a list of commands. And then so I'll use create to create a strategy. Space bar kind of brings the list of strategies, and I'll pick the Avellaneda market making one.
Yeah, you're lucky is that Nico isn't here, so he would be pretty angry at you so in Avellaneda.
Okay.
Yeah, because
the pronunciation.
Yeah, because the guy is Argentinian.
Yeah.
Marco Avellaneda. Not even with a Brazilian. I remember.
I'm not going to try. I'm not going to try. Okay.
Yeah.
So let's say Binance, and then so I'm going to pick the Doge BTC market here, and so Doge per order. So let's see. So I'll pick something like what is it? So call it maybe 200 Doge per order, and so I'm going to answer some questions based on Avellaneda Stoikov model. And so the first one is: do you want to automate Avellaneda Stoikov parameters based on min-max spread? Paulo, what does this question mean?
Yeah, this is something interesting because as we were building this strategy, talking how to design, is that the strategy needs two constant parameters that at first you would have to look into different ways to find what will be these optimal parameters, right? So it's kappa and gamma, and basically they are parameters that you use to model what's the market state and what's the risk that you want to run with the strategy, what's the risk you want. So one solution we have, since this would need a whole new process to
sorry, go on. I was Googling the paper and trying to find the equation in the model.
Find them. So our idea was that we found a way to automate this calculation, right? So that way you have two options. If you have a way to calculate these two parameters, you can set this question to false, and you can manually enter these values. But if you don't, you can set to true. And what is going to happen is that based on what's the ranges of spreads you want, the minimum spread and the maximum spread you want to have your orders, we came up with a mathematical formula to automatically find an ideal situation. Yeah. Oh, sorry, an ideal value. A good comparison that Nico did when we presented it is that it's the same as if if you bought a professional camera, professional photography camera, you could set it to automatic, right? You take good photos, it will work. But if you are professional and you know everything what each of those settings on the camera does, your photos can be way better than the automatic one. So it's kind of like that good comparison that he did there.
Yeah, that's a good comparison. Yeah, I see what you mean. It's kind of like, if it's kind of like, if I really knew what I was doing, I want to customize the strategy, based on some custom model, and I knew kind of like how to, calculate this kappa constant, that I can put in false. But right now, because we're just doing this demo, and I'm not going to do that. I think it's basically to translate what you're saying. It sounds like what we've done is we've kind of like taken this model and we've simplified certain assumptions so that the user can, just by entering like the minimum spread, the maximum spread, we can infer these constants from these like more simple user generated parameters. So it's kind of like that's what the digital camera analogy is, that there's like an easy mode for the user that allows them to automate some of these like advanced parameters.
Yeah, if you like math, you can go to our blog on our site. We have detailed how we get to these automated parameters there.
Oh yes, that's right. Yeah, that's right. Yeah. So I'll show that to everyone as well. So basically, on the blog here, I think we wrote this blog post a few months ago about the technical deep dive. So basically, there's this blog post here, which really explains kind of like the math behind the Avellaneda strategy, and kind of like how we calculating some of the constants and the parameters. So, okay, so that means that I should definitely put true here, because we don't want to spend the rest of this live stream doing that. So basically now I'm just going to enter the minimum spread and maximum spread, right, Paul? Is that what is the minimum and maximum spread that I'm entering here?
Yeah, basically, what's the range that you want your orders to be created? So if you want to have the spread, the orders you created if you don't want them to be created with less than, let's say, 1% spread, you set 1 here. And the next question will be about the maximum. So if you don't want your orders to be created more than, let's say, 5% from the current price, you can also define. The first one is minimum spread. The second question after this is going to be the maximum spread.
Yeah. So I would say, well, one way to think about it is more like the percentage is really like, it's kind of like, how far away from the mid price do you want to set your orders prices? So you look at the Dogecoin, kind of like, here, you can see that what you can see here is kind of within like around, if this is like 1,000, like 1024. The lowest is like 1015, up here is like 1032. So essentially the spread here is about 0.5%, or in between like this one and the lowest here. So
yeah, a good way that you can see the market spread if you click on the depth on the graph.
Okay. Got it. Yeah.
Yeah, you can zoom in.
Okay. Oh yeah. Oh yeah, you can see the.
Yeah,
cool. Wow, nice. So
and you can see where the orders accumulated on the book.
Oh yeah, that's really cool. That's a really cool tool.
Yeah, I think you can. The problem is just that you can't see on too much detail. For example, it's only one decimal point, and but you can have a good idea where is the majority of the liquidity on the markets, and you can kind of use that as a starting point to set your parameters.
Yeah. This is actually interesting. I think this is a great kind of lesson for the audience, because it's kind of like what you see here on the order book is really just kind of like the orders within like a small fraction of the mid prices. It's sort of like basically this little window here. But the reality is this order book is actually comprised of many orders that you don't really see, which is like everything, over here. And so, I mean, there are people with placing orders that are, like 10, 15% away from the mid price, which really just shows you, how volatile the crypto market is. Because, I mean, like prices do move this much, in a small amount of time. So I would say, so even though, these orders here are the ones that get filled the most often, as a market maker, sometimes you don't want to be like the ones that are filled the most, because, like the wider your spreads, the more money essentially you make by buying and selling both sides.
Yeah, indeed, because the key of market making is to capture the difference of two offers at the same moment in time.
Yeah. But I think for this demo, I'm gonna be a little more aggressive than I normally would be, just because I think it's more fun to try to get some orders filled. So I'm gonna be pretty aggressive here. I'm gonna put just like 0.01% from a spread perspective, and then maximum I'll put something like 0.5%. So actually maybe a little more, maybe 0.6. Basically, I'm gonna try to be like pretty aggressive here. But this is more to try to get some orders filled. Guys, what's happening?
Yeah, also it's always good to remember to the users to check what's the trading fee, because there's a cost that incur on every trade that you bought will do.
Yeah. Yes, yeah. That's a really good point, because the thing is that like this 0.01% doesn't include the fee. The fee I'm paying as an individual user in Binance is it's probably something like 0.075%. So I'm going to lose money on every trade if I fill the minimum spread. And so meanwhile, some market makers out there are probably VIP level 1 or 0, which means they're paying much lower fees than an individual trader. So the next question, Paulo, is enter the volatility spread multiplier, and says if volatility multiplied by this value is above the minimum spread, it will increase the minimum and maximum spread value.
Yeah, this is something extra that we added when we will create this strategy, is that we wanted to, along with the adjustment of the spread based on your inventory and how much you have on your balance on each side of the trade. By the way, just a small parenthesis, this is kind of the base of the Avellaneda strategy, is that it tries to reduce the inventory risk, but we'll talk a bit more about it. This that we added is that you can set a value that if the volatility increase, what is going to happen is that your market spread will also increase, right? So if you have a market that's on a constant volatility of, let's say, 0.1% over the last 2, 3, 4, 5 hours, and suddenly there's a huge increase of volume, there's a lot of trades start to happen, and the volatility does a big spike to 2-3% in a few moments. What's going to happen is that the bot will increase the spreads of your orders.
Okay.
So your minimum spread won't be 0.01. It will be bigger to match that increase in volatility. So you can kind of take a bit advantage of these small spikes, small increases volatility.
Got it. So I guess if I set my does minimum spread, does it affect what I said here? What would you recommend on like a new user put here as the value?
Well, I would say that start, for example, with small value, because that way a smaller increase in spread will change more often your positions, right?
Got it. So like zero, like something like small, like 1 or less than 1.
Yeah, you can do less than 1, 0.1, 0.2.
Okay, let's use 0.1. Let's see what happens at 0.1, and we can always adjust it later on. Okay, so the next question is, what is the enter the inventory risk aversion between 0 to 1? So basically this is controlling like how quickly I get to my inventory at threshold, like my target, right? Is that
Yes, this is where the core of the Avellaneda model starts. Is that the base of the strategy is that you want to reduce your inventory risk, right? So sorry about that. The idea is that you want to start the trading day and end the trading day with the same inventory that you started, right? So you want to have this constant idea that you don't want to change your inventory too much between the start of the end of the day. So this configuration in specific, it's how much how big is going to be the push, let's say like that, the push that the bot will make to force to go to make your positions get into your target, right?
Okay,
So
got it. Got it. Yeah.
so
Is it kind of like it's like right now? I think I have like 20% Doge, but ideally I want to be like maybe like 50-50. Half Doge, half BTC.
yeah.
So it's kind of like the bot's going to try to buy more Doge and sell less Doge to try to gradually get me from 20% to 50%.
Yes, indeed. The higher this number, the more likely the orders that that the bot will create will be in the direction to reach your 50-50 inventory percent, right? So the higher the number, the more let's say you are currently, you said 80 BTC, 8% BTC, or the opposite?
Yeah. Right now it's 80% BTC. Yep.
8% BTC, right? So if you set this to 0.999, it's the one of the highest values. What's going to happen is that the orders will be created in a way that you will buy more than sell. Your bid spread is usually going to be closer to the mid price than the sell, to kind of try to push your inventory position back to 50%, right? So you increase the probability of executing a buy order instead of a sell order.
I see.
Right?
I see.
So that's
what happens if I set it like close to zero, or like closer to zero?
You mean set the target?
No, set the inventory risk version.
Close to zero. A smaller number, what means is that the orders created will be more symmetrical. It won't have this too much strength on this this push to return to inventory position.
I see.
So
okay. So yeah, it's really kind of like, to paraphrase what you're saying, it's kind of like it really is like I have a target inventory level I want to get to, and this really controls like how quickly I get there. It's kind of like
yes.
If it's 1, then it's going to push me more intensely to try to get my inventory level there. But if 0, it's like I don't really care. I'm going to go like very, very slowly to try to get to
yeah, close to 0. The orders, the majority of the orders, the situations. Sorry about that. The majority of the time, your orders will be created in a symmetrical way with the same bid and ask spread.
Okay. All right. So yeah. So I think for the demo, I'll just put 0.5 here as well. Oh, by the way.
Put it higher. Put it. Oh yeah, we can change later. But it'll be interesting to put higher because we'll be able to see the position of the orders.
Okay. Yeah. Let's maybe try after we run the bot. By the way, I just want to say, if people have questions, please put in the chat, because I think one goal of doing this is try to kind of like really illustrate what's going on under the hood when someone new is trying Hummingbot. So if you have any questions about these steps we're doing here, just let us know, and we'll try to explain live. So the next question is, how often do you want to cancel or replace bid and asks? Can you explain what is this parameter doing?
Yeah, it's just how long the orders will stay on the market until it's canceled and created a new order. But like if you put in 10, every 10 seconds, a new cycle of create new orders will happen. That will be based on the current market price, right? If you take 300 seconds, it would take 5 minutes to another be canceled and created again to adjust to the information of the market.
Okay. All right. Let's put in something fast so some action. Let's put 10 seconds. And so inventory target. I think I actually started with, I know I have about 20% Doge and 80% BTC. And so starting out, I'll just try to keep the same percentage. Just try to keep it at 20 and see what happens. And we can adjust the stuff later on.
Yeah, this part is interesting also if you want to, for some reason, you want to keep the majority of the assets on your balance on one token or another. For example, this is Doge BTC, right? So if you enter, for example, 0 there, majority of the trades will be created in a situation where you will, most of the time, you will be 100% of BTC on your balance, right? If you want to have more Doge, to hold on Doge, you set it to 100%. The majority of the trade will happen in the direction that you accumulate Doge. So that's something interesting that you can mess around.
Yeah, that's right. And sometimes we hear users kind of use Hummingbot to like, it's almost like they use it to like slowly get to some position, over time. Like, kind of start with like 0% Doge and then gradually move to like 50% Doge without buying it all at once. All right, so I'll use 20. I'll just try to keep the same position I have right now. So this is this is kind of the marketing strategy, as Paulo mentioned, where this is kind of like I'm starting a trading day, and I want to end the trading day with the same percentage as where it started, which is 20%. And finally, I can save the file to import the configuration strategy later on. And so now I'll hit start to start.
And the magic happens.
Yep.
So it will take 1 minute here to start, as you can see on the log on the right side of the bot, because the bot at this moment it is collecting the price data to calculate the volatility, right? To adapt to change the as needed if the volatility increase. So it's kind of creating a historic history of price, so it can be used to the other parameters. Also you can change to the trading view on the Binance side.
Okay.
Yeah, put it to a smaller time frame, 15 minutes. So in 15 seconds, we start to see the orders appearing on the market. 5.
Oh, there you go.
There we go.
Those are the 2 orders. So let's see, So I see why you asked me to do the trading view, because it shows the orders here actually on the charts that you're putting in. So you can actually see them kind of relative to kind of like where the prices have been over the past few hours. That's really cool.
Yeah, indeed. Unfortunately, not all exchanges have this feature, but a few of them have, and it's good to kind of have a better sense where is your orders on the market.
Yeah,
right?
Yeah, I like it. You can also see them be canceled too. Every 10 seconds, they're disappearing and reappearing again as the bot is canceling your orders. That's awesome.
Yeah, it's pretty cool.
Yeah.
There's still a few interesting things that when you type it config on the bot, right? So you who is watching can see that there is a few options that didn't appear on when you first created the bot, right? So there is a bit. We have some our blogs and our documentation have them a bit more on detail, but some of them. Let me just check something here. Right. So there is 2 of them that I would like to call attention to. One is the closing time, right?
Mm-hmm.
Closing time, you see there 0.41. Type in status to see what's going on here. There, so you go. You can see there is a time until end of trading cycle, right? 57 minutes.
Mm-hmm. Yep.
Okay, so this specific configuration, what happened is that the original idea of the model, the Avellaneda model, is that the traditional markets, they have a start time and a closing time, an open time and a close time. It opens at, let's say, 10 a.m., close at 5 p.m. So the starting point of the model is that when a market maker start the day, he start with X inventory, right? And at the end of that trading day, the ideal situation for him is to close the day with the same ratio on his inventory, right? So similar to what he started, the same proportion, the same ratio, he closed the day with the same ratio. So that's one of the basic ideas that of the model wants to do. So since crypto is 24/7, we don't have an open and a close day or close time. What we tried to do to emulate this is to add this parameter, this closing time, where you can set what will be a trading cycle, right? So in this case, the default value is 1 hour, right. But you can, for example, set 24 hours. So the way the model works, where it takes more risks at the beginning of the day, and as the day goes by, it starts to take less risks to return the inventory back to the start. And so you can expand this to a determined cycle, whatever, how many seconds you want. 1 hour, 1 day, maybe a whole month. I don't know. So it's a bit of a tricky game that we have to make to make sense of the unlimited 24 hours that crypto markets are.
Actually, I think this is a really important point because, and by the way, we just had a first fill. We got our, kind of sell order of Doge filled. So now it's going to add more orders. But as Paulo mentioned, like market making, your main risk is really inventory. And so one issue with market making, just calculating market making, is like, how do you know whether you've actually made money or not? And that seems like a very basic question, but in a market like crypto, when prices change all the time, knowing whether you actually made a profit it's a hard question if your assets are changing all the time. So that's why the classic market making kind of definition of profitability is basically like using the market value of something at time in the past versus the market value of the portfolio at today. And so what that means is if you can take away the inventory cost, if you start with the exact same amount of, let's say, Bitcoin that you started with, and you want to make sure you have the exact same amount of Bitcoin at the end of the day versus your other asset, then it's a lot easier to calculate whether you made money or not. So in stock terms, it's very easy for, like, in equity markets, people always have the concept of a trading day. So that's why it's always like, they always try to start, most market making firms try to have the exact same exposure at the start of a day to the end of the day. Now in crypto, it's 24/7 cycle. But so the way I would use this is I would kind of like think of like, how often do I check back in to my trading bot? Do I check it once a day or maybe once a week? And I would try to kind of like use that time frame as the trading time, so that I kind of have a complete trading cycle from the time I start my bot to the next time I come back and check it.
Yeah, indeed, because having 24 hours markets can be a bit stressful, especially when we have Elon Musk tweeting now and then. And the other one that I just want to mention is that the field order delay, right? The configuration that's field order delay. We have it also on the pure market making strategy. It's a bit old, but there is always a bit of confusion. What is the order refresh time and what is the field order delay? So the order refresh time is how long your orders will be created, right? So every 60 seconds, in the case you set it to, how much was it? 10 seconds.
10 seconds. Yeah, 10 seconds.
So every 10 seconds, your bot is going to cancel and create orders, cancel, create orders, right? That's the process. But the field order delay, what happened is that if one of the two orders, the buy or the sell, gets a fill, is taken by the market, someone takes your order from the market, what's going to happen is that the bot will then wait 60 seconds to see if the opposing order is going to be taken, right?
Mhm.
So it is a small delay to give it like the, let's say, the market some time to move back and fill both orders. So this is a small tricky configuration that you can do a lot with it also. You can, let's say, increase a lot 1 minute. So when a fill happens, your opposing order will still be there for 1 minute. So you are creating less order, but you might also be increasing the chance of the opposing order be filled, and you essentially capture the spread. So this is an interesting setting to play around with it too.
Yeah, absolutely. And kind of echoing Paul's point, like I would say, yeah, the field order delay and closing time and kind of like, the order refresh are definitely a lot of like interesting options. But I would say each of these are kind of really control every aspect of how the bot behaves. So for instance, like order optimization controls like how you respond to other bots, or other market makers, on the book. I think one aspect of market making is it is a competitive sport, if you will, because it's kind of like you're not exactly competing with other bots or other market makers, but they're what they're doing impacts what you're doing, and it's almost like it's a game you're playing between you as a market maker, the market makers, as well as the takers in the market, which might be both people or they might be bots as well. And so that's why I think Hummingbot is, I think of it as like a tool for you to build your bot. It's like it's kind of like, so you can build the best possible bot out there and go out there and let it run and compete with all the other bots. But it is very much a tool, and so it's only as good as kind of how well you know how to use it.
Yeah, indeed. Imagine a food market where both me and you sell bananas. So it's in an essence, it's the same that happens inside a financial market, right? So we're both trying to get the best price for our bananas. So we kind of have this game between me, you, and any other that's selling these bananas. What's going to be the price that the market wants to pay for it, and how maximize that difference from the supplier that we get this asset.
Yeah. And actually, that's why another factor is actually kind of like market selection. So, like for instance, one reason I picked Doge BTC and not like something like BTC, USDT, is because it's kind of like like I'm a small fish. I'm not. I don't want to compete with jump trading and Cumberland, and so picking smaller markets means that you kind of like face less competition from other market makers or from especially from larger market makers. And so, or another thing is like I would say Binance. We always use Binance because Binance is a big exchange, and that's where all the volume is. But that's also where the largest market makers tend to be. So some of the small exchanges we connect to. That's why we connect to 30 different exchanges, because some of the small exchanges, the spreads are a lot wider, and so you still have less much competition. You can make more in the market.
Yeah, you can get better spreads depending on the market. It's a lot of small things. So what I always say that every time you are thinking of creating a new strategy, try to set up a new bot, you have to kind of think, what do you want to do with that bot? What's the objective? Do you want to accumulate coins on one side or another? Do you want to capture big spreads on smaller markets? Do you want to just provide liquidity to a project that you like through the liquidity mining campaigns that we have? So it's more like you will never find configuration that someone else use that have the same use, or it works the same way to you. So you kind of have to understand what happens behind it. What's your objective? How each parameters affect the objective that we want to do, and so what works for one guy, for one person, might not work for the other one, might not work for you. So it's a bit of game of trial and error, and work around and try a bit to see what works for your case.
Yeah. Actually, that's a great segue, because actually maybe we can give our audience some intuition around kind of like how this works. So right now I think my inventory target is 20%, and I think I'll change it and see what happens to the bot if I change that type target threshold. So right now I think it's the inventory target base percentage is 20%. So it basically means that right now, like I'm trying to keep the same percentage of Doge and BTC that I had out there. So right now it's kind of like I have like the 80% of my my portfolio in value terms is Bitcoin, and the other 20% is BTC, like between those two. So actually, I wonder what will happen if I change this to, right now it's 20%, or actually right now it's 14% Doge. So right now, let's say I set it to something like, well, yeah, Paulo, what do you think I should set it to? Something like 50% or?
Yeah, you are 30 on Doge, right? Yeah, it would be interesting to flip 100% on Doge, so that way you will see that the bid orders will be created closer to the market price.
Okay, all right, let me try that. So 100% Doge. Let me actually, I think yeah. Currently, we need to stop the bot and start again. So it's actually going to take a minute, I think, to calculate, unless it has the volatility sample already.
No, it reads the volatility every time it starts. We are actually, the team is trying to figure out better ways to see if we can get this process fast, or I don't know. We're still looking into it.
Okay.
Also, as it started, one thing also to mention is that this strategy, we are still improving it. So we are on the next release, maybe on the other one. I'm not sure exactly when it's going to come, but we are adding a few extra features that to whoever already used pre-market making in the past, know how pre-market making. We're pulling some features to the Avellaneda strategy, so to make it a bit more customizable than currently is.
Yeah, I agree. Okay. So yeah, so it looks like so basically so you guys can see so right now, like I'm only like the amount of buying is a lot more than the amount of selling now.
Yeah, and you can notice that the spread on the buy side is smaller, is half of the sell side, right?
Oh yeah.
You can see on the bot 0.3 on the buy side, 0.6 on the sell. So that means that you are more likely to buy than to sell in this situation. So over time, what is expected is that your Doge inventory is going to increase.
Yeah. So it's basically there's actually two factors that make it more likely for you to buy and sell. The first is you have a tighter spread on the buy side than on the sell side, and the other factor is that the amount of Doge you're buying is larger than the amount you're offering to sell. So you can see that initially it's kind of like 200 is Doge on either side, but now we're selling 200 on the on one side and 74 on the other side.
Yeah. All right. So today didn't had any questions. The chat is free. So are you guys there yet? So say hello. And well, I think it was a good presentation. and I don't know. I started to run this market make bots last year, beginning of last year. That when I learned about Humbots, and I have to say there's still a lot to learn. Every time I learn something, I discover that a bit more that you need to learn. That it's really interesting to go through the journey.
Yeah, with this, like every time I talk to like even like my friends who are quant trade, like running professional quant trading firms, they're also learning too. Because the reality is like we're in a market where it's like every day there's some new exchange or new protocol being launched. I think Uniswap just went to layer 2, right? It's got 40 minutes. So it's kind of stuff that where it's like I just think we're in a really exciting time to be a trader right now, because it's like there's so many new kind of protocols and exchanges launching, but also there's like finally tools like Hummingbot that kind of like in a community of people where they're trying to come up with like different ways to kind of automate trading on those different protocols and engines. So that's why whether you're a trader or a developer or just just want to be interested in learning about new stuff, I mean Hummingbot's a really exciting place to try out, because basically what we're trying to basically make available this open source tool and build community of people using it to try all kinds of weird and wacky stuff.
Yeah, indeed, really exciting. All right, I guess that's it for today. Next Friday we're back. I'm not sure. I have to look up what we're going to do next Friday, but probably something also exciting. And that's it for now. See you guys. Good to have you here, Mike. And
Yep. Thanks,
see you soon.
Bye.
Bye, everyone. And happy trading to all.